Should you buy Monster Beverage stock? Monster Beverage has a current market cap of $54 billion. With $1.4 billion of cash and little debt, the enterprise value is $52.5 billion. Revenue over the last 12 months is $6.3 billion, net income is $1.2 billion, and free cash flow is $700 million. That means Monster Beverage stock is valued at 8 times revenue, 45 times earnings, or 75 times free cash flow. Those are expensive multiples, and that's because Monster Beverage has been one of the most impressive stocks of the last 20 years. Its revenue compounded at over 10% in the past decade. It's taken 40% of the energy drink market, creating its own category, and it did all this pretty much without any debt, other than capital leases. Monster's gross profit margin for the last full year was 50%. That's a decrease from 56% back in 2021 and 59% back in 2020. And historically, there were years when it was even above 60%. Although high gross margins are a good indicator that a company has pricing power, this recent decline is a bit worrying, especially since 2022 was also a year with high inflation, and the company saw a significant increase in its operating expenses as well. All of this has reduced the operating margin from 35.5% in 2020 to 32.4% in 2021 to 25.1% in 2022. However, the market doesn't seem concerned as Monster's share price keeps increasing. It's up more than 30% over the last year and more than 70% over the last 5 years, beating the returns of the S&P 500. Based on today's market cap, though, it's difficult to make an argument that Monster is fairly valued. At 45 times earnings, that means an investor would need to wait 45 years to get her money back, assuming earnings remain flat. That's expensive even for a quality business like Monster. The company remains significantly more expensive than rivals such as Coca-Cola, Pepsi, and Bud, and health trends may even put a dent in Monster's long-term prospects. Over the past 10 years, Monster Beverage has grown earnings at a rate of 13% annually. If we assume that rate continues for the next 10 years and then Monster stock trades at 35 times those earnings, the company would be worth around $141 billion in 10 years' time, which would give an investor a return of around 10.4% per annum. So the big problem here is not necessarily earnings growth, it's that the earnings multiple has very little room to expand upwards. That means there's very little margin of safety in Monster Beverage stock, and that's why I give it a neutral rating. But these are my personal opinions, not financial advice, and I've got no position in Monster Beverage stock. For more detailed investing ideas, make sure to visit our website, overlookedalpha.com.